Welcome to All About Investment, an education series by Arohan. It is focused on demystifying investments for individual investors. In this module, we are going to cover the most important asset class where people have been currently invested into. It is the physical assets and includes both real estate and gold. It includes agricultural land, the urban real estate, jewelry, and any gold invested in through financial tools. Now, if you look at real estate, it has been the wealth creator of last decade between 2000 to 2010. It gave a great return, right, driven by rapid growth in salaries of professionals. Many places, families converted from single to double income, and there was a huge rural to urban migration. Because of these factors, the real estate prices really did well in most urban areas to a level that per square feet cost of real estate in Mumbai is much higher than the average real estate cost in developed nations like United Nations. And hence, we got little careful. And we have seen the signs also, right? Earlier also, let's say between 1992 to 2002, the house prices were completely stagnant. So we are seeing, burst where it has done well, but long periods whether it has not done well. And over a long period, people think that real estate has given a great return, but CAGR over long period has been 13 to 15%. Finally, we have started seeing correction in house prices in last 2 to 3 years. Not only correction, we are seeing that the liquidity of real estate market has gone down dramatically. And if you need to sell, instead of the perceived prices, you have to sell at 10 to 20% lower prices. We have also analyzed different real estate statistics, and we have seen that real estate future is now in question mark. There are multiple reasons. It is affordability is the key. It has become so expensive that even if you take it on bank loans, the monthly installments which you have to pay is beyond your salaries. Second reason is the black money squeeze, which is quite significant, and its direction is quite clear, right? Direct subsidy transfer and lowering of subsidy reimbursements, right? Which also has reduced black money. There is a huge inventory pile, as you can see in the chart on the left, and drying up bank finances is the final reason. So we have become very, very careful, right? It is a good time probably to book some profits in real estate if you are too overweight. Having a house is important. House in which you need to live, right, is very important. But beyond that, you can diversify, right? And if you take your house out, right, real estate can't be more than a quarter of your investment. Very diametrically opposite to the current situation of Indian household. Now, if you see a very long-term view of gold, then if you see it in US dollar terms, since 1990s, it has given less than 5% return. But there was a short period of 10 years where gold gave very good return, right, of about over 12%. Right? There was actually no movement in gold prices practically between 1990 to 2004, But in 2004, it suddenly shot up and touched about $2,000, right, within a short period of 10 years. It has since corrected. It is not at 1200. It is now corrected to about 1150 kind of levels, right, in dollar terms. So it seems golden phase of gold is over. And yes, in India, there is a duty of 10%, which is an artificial inflation in asset price of gold. In case that goes out over a long period, there is a 10% risk of asset deflation anyway. Right? So to summarize, physical assets have been wealth creator for us historically, but they have done their bit. We can have them as a part of portfolio, but we have to have other asset classes in our portfolio. There is a clear shift to financial assets, right? One home is fine, right? But it can't be 75% of your portfolio. Thank you.